Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about IRCTC, whether you should buy the stock at these levels or you should avoid it. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about IRCTC, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel and help you also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from day to day. For detailed market or company talk that you have or exclusive stocks that you're holding, you can directly email me and we can work things out. Now about the company. Established in 1999, it is the only player in the railways segment. It has complete monopoly in the railway ticketing domain. It has nationwide network providing catering, online ticketing and hotel services, and the market cap of the company is around 22,000 crores. If we look at the financials, then this time around in Q2 FY21, the numbers were not that great, and you had the sales dropping by around 80%, and quite understandably, profit dropped by around 66%. And there's high government holding and without any debt. You need to understand that apart from the last 2 quarters, the return on equity has remained around 28-30% and net profit margin of 18%, which is quite robust for such a company. And with the trains probably opening up in a year time or something, then things will become even brighter for the company. If you look at the performance, stock is up 3 times from the IPO prices for sure, but have been a darling of the market up till February, March of last year. There's high institutional and government holding with only 6% free float, but over the last 6-8 months, the stock has come down. So it was around 2000 rupees in February, March of 2020, in February of 2020. From there onwards, the stock fell to around 850 and then has stabilized between 1300 and 1400, and now is making a move upwards. So it has come up with strong numbers continuously over the last many quarters. There's high dividend payment that has been done by the company, as has been with all, you can say, government owned companies. Currently it is under stress due to the low train movement, as I mentioned that because of the current situation, the movement of trains is not that much, and only select trains are running. It is a kind of a monopolistic business in the ticketing domain. In fact, probably it is the busiest ticketing platform in Asia, with a kind of, you can say, numbers that are virtually unimaginable when things are at full pelt. There are millions of, you can say, users using the platform, so that is absolutely amazing. What has been the recent developments? Travel industry has been hurt extremely badly over the last 6-8 months, and although many of the other industries have come back with a vengeance, and many of the stocks have come back also, considering that unlock theme has really worked out well, but for the railways and to an extent even the airspace industry, things are not that great, and so this will become better only probably when people get vaccinated, or only when people start traveling in a more normalistic manner and things normalize. There's fear of sharp drop in sales as commuters drop, so the sales numbers could remain subdued, and that is the fear with all the investors at the moment, that over the next 2 quarters also the sales number could remain muted, and hence people are not really running to buy this stock, and the stock is not at 52-week high and currently is around 1490, 1500. But things are returning to normalcy, and you have to understand that many of the sectors and stocks have already run up so much that there are very little space where you can invest and be very, you can say, comfortable investing with the kind of valuations that we are having. This is one space where you can invest in this way. So at these prices, things look very good. I'll analyze the valuations in a bit, but trains may begin from around second half of 2021. So Pretty sure that from July, August onwards, things will become much better on the ground, and we will see more trains running, and there will be more, you can say, busy the platform of railway ticketing, as well as catering services will also increase its, you can say, presence with respect to more trains running. So overhang of OFS, which was a big overhang, that is now behind us. So right now we are not concerned about the OFS. It has already been taken care of at around 1350, 1360, around 1368. So that is also behind us. So that's also a positive that we don't have to worry about it. And valuations are pretty reasonable. So next on, I'll discuss about how the valuations look like. So this is the valuations assessment. Currently, it trades at around 60 times earnings, but FY22 EPS. So this is like FY21. It just looks like 60, 70 times earnings. But if you look at FY22 EPS, I would expect that from April onwards, things would be much better, and we could see an FY22 EPS closer to 50 rupees, 50, 52 rupees. Hence, currently the stock is trading at under 30 times earnings, just about 28 times or so, which is extremely reasonable. Being a monopoly, valuations are very attractive, and it normally used to trade at 60 to 70 times earnings. So there is a lot of scope for, you can say, PE re-rating on the stock. Target may end up being between 3000 to 3300, considering 50, 52 rupees as the EPS over the next couple of years. So if we take in FY23, we could be headed to around these levels of 3300 pretty easily. So somebody investing right now can have a 2 3 year time frame and could look to double their money in the next 2 2.5 years time frame. If you look at the technicals of the stock, then there is strong support between the 1330 1400 levels. Currently the stock is at 1480 1500. So any dip towards 1400, any 5 7% decline could be a very good buying opportunity. The breakout is expected above 1550. We are heading there. So post the OFS news and everything, things have started looking up for the stock, and people are, or informed investors are, slowly accumulating the stock. Maybe some big wigs are accumulating the stock, because we are seeing from those 1370 1380 levels stock inching upwards. The 200 DMA is around 1370, which was around the OFS price that I was talking about. It looks strong on short term chart as well. With a stop loss of 1370, one can buy. So a 10% stop loss, maybe a 30 40% upside. I think 2000 is very much possible by summers, and 3000 possible in a couple of years time. Heavy accumulation has taken place for nearly 6 months. So you have to understand that the stock made a tabletop kind of a pattern on the technical chart. So if you look at the chart, it has been completely flat after going up to 2000 and then returning back to 850. The stock was flat between 1300 to 1370. These levels for 6 months it has been in that 5% range, and now has broken out. So I won't be surprised if the stock scales past 1550 and goes up higher as things normalize even more, as people get the vaccination done and everything. So by Diwali, I see 2000 plus levels coming in, and valuations are becoming even cheaper because things are getting normal. So there would be more people traveling, more people booking tickets. So numbers will set to improve from second half of 2021. So what needs to be done? You can add between 1300 to 1500 levels, have a good 2 3 year time frame, and would reward you very well. Can continue to surge beyond 3000 also. So it's a very good long term prospects as well. So this was my video on IRCTC and its valuations. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.